Welcome back to Patrick Boyle on Finance. In today's video, we'll discuss Softbank's investment in Wirecard, the German payments company that's mired in a $1.9 billion fraud. We're going to learn how Softbank appeared to invest $1 billion without actually putting in any money at all, and how Softbank employees profited from the trade without Softbank itself actually profiting. It's well known that when Warren Buffett invests Berkshire Hathaway's money in a company, that the company's stock price goes up. I don't mean in the very long run because he chose the right stock to invest in or anything like that. I mean that it instantly pops when it's announced that he's made a new investment in a company, and that's because other investors mimic Warren Buffett and buy the stock too. This type of thing is often referred to in the finance industry as a halo effect. This is obviously a good thing for Buffett, but it mostly benefits other investors in the company who in aggregate own more of the stock than Buffett does. In addition, Buffett is a long-term investor, and so while this pop in the price possibly amuses him, he doesn't really capture the benefits of the stock price pop. In Silicon Valley, Softbank has its own halo effect, or at least it used to. Softbank had a good run where they had a reputation for picking tech stock winners. When Softbank put money into a company, they were known for introducing the company to their other portfolio companies, creating a virtuous cycle that other investors might want to come along for the ride for. Softbank's halo has started to look a little bit tarnished over the last year, as WeWork imploded and the IPO of Uber fell flat. Softbank's recent $1 billion investment in Wirecard, unlike their WeWork investment, won't force them to write down any assets, because Softbank never put money into Wirecard itself. What Softbank appears to have done is monetize their halo effect, separate it out from any long-term investment returns, and simply profit from any pop in valuation from their reputation and stamp of approval from having selected Wirecard. Softbank never actually put any money into Wirecard according to Bloomberg. Instead, what Softbank did was they facilitated a $1 billion convertible bond deal for the German digital payments company without investing any cash. The deal was structured by Softbank and Credit Suisse. The financing structure appeared to be backed by Softbank, implying their stamp of approval to Wirecard, which had faced years of scrutiny over its accounting practices. Wirecard's shares rose more than 25% between the announcement of the Softbank Credit Suisse deal and its signing in September 2019. A SoftBank fund that manages money for SoftBank employees, along with Mubadala Investment Company, a wholly owned investment vehicle of the government of Abu Dhabi, put the money in to buy a Wirecard convertible bond. There was also a strategic partnership where SoftBank would introduce Wirecard to its other portfolio companies and otherwise provide support to Wirecard. The same day, Credit Suisse quickly repackaged and resold those instruments, issued just hours before, to a broader group of investors at substantially less attractive terms and at a worse price than SoftBank's original entry price. The market viewed the news of the Softbank investment as a vote of confidence in Wirecard. Meanwhile, Credit Suisse built a Wirecard exchangeable bond that mirrored the Softbank convertible. When the deal closed, the Softbank investors sold the exchangeable. Softbank's employee fund bought the convertible at the pre-investment price and sold the exchangeable at the post-investment price and captured the 25% upside for themselves without putting up any cash. The trade managed to monetize the Softbank investment halo, but Softbank itself didn't make any money off of it. Senior executives at Softbank profited from this trade, along with the government of Abu Dhabi. Softbank is now trying to distance itself from Wirecard now that the German payments company has gone bust. They're seeking to terminate their 5-year partnership formed with Wirecard in April 2019, according to a Bloomberg article. Softbank didn't lose any money on its Wirecard trade because it didn't actually put up any money. What it did put up was its reputation, which was enough to provide its executives with a quick profit. Softbank invested its reputation, but unfortunately the company they chose to invest its reputation in was Wirecard. If a business is careless with its reputation, it can end up losing it. The other problem with a halo monetization trade like this is that if you do them too often, you end up damaging the halo. Let me know in the comments below what you think of this SoftBank trade and of Credit Suisse's involvement. Don't forget to hit the like button if you want to see more content like this. Also hit the subscribe button and the little bell icon next to it. See you later. Bye.